Houston investors are asking one question in 2026. Should I run an Airbnb or stick with long-term tenants? Because one strategy can make you $1,000 or more every month, and the other can quietly build you $1,000,000 portfolios with less risk. Today, I'm going to explain all of that step by step and why this is all happening. Exact Houston regulations you need to know. Best neighborhoods for each strategy. Real profit margins and which one actually build wealth faster or over time. And by the end of this video, you will know exactly where to buy, what to rent, and how to maximize returns in Houston. If you are serious about investing here, stay until the end, because I'm also going to show you the 3 Houston suburbs making investors the most money right now. Please click the like, share, and notification button. Segment number 1 is why Houston is a gold mine. Houston is one of the top landlord markets in the country. Here is why investors gravitate towards Houston. 1, no state income tax, landlord-friendly laws, high population growth, affordable entry prices. Median home price in Houston is less than $320,000. Average rent is between $1,800 and $2,200. Rental demand is driven heavily by the energy jobs, medical center, Port of Houston, and much more, and corporate relocation. People moving from different states to the greater Houston. All of this encourages rental demand. Houston remains one of the few major metros where homes still cash flow consistently. And here's segment number 2, short-term rentals, which we all know as Airbnb in Houston. Things you need to consider, the regulations that you need to know. Houston does not ban short-term rentals citywide, but investors need to know registration required in many areas. Hotel occupancy taxes apply. HOA often restrict short-term rentals. Some neighborhoods enforce deed restriction. There have been proposals in different centers, different quarters for permit and fees around $200 to $300 annually, but enforcement varies by area, by suburbs and the surrounding areas. And here are some risks. HOA and deed restrictions banning Airbnb operations. Best Houston area you need to consider for Airbnb is 1, the downtown and the midtown area. Because of what? The business travel. A lot of business people come around that area. Then number 1, because of medical visitors, weekend tourists. And number 2 is the medical center, because of 1, traveling nurses, patient families, people visiting their loved ones in hospital want to come there. The 3rd one is the Houston Heights, because of 1, high nightly rates, walkability to bars, restaurants, and some cafes in the area. The 4th one here is the Katy Cypress area, because of 1, family want to stay here longer for good. Corporate housing, a lot of companies moving to this area. And here's numbers I want you to know as in terms of Airbnb. Average nightly rates fluctuate between $140 to $250, and occupancy is 55 to 70%. Typical monthly revenue is $3,500 to $6,000, and you need to account for expenses like cleaning, furnishing, management, vacancy, and other things that may come up, so that you know you can deduct all of these things before you actually arrive at your net profit. And here's the example here. If you buy a home, say $350,000, and the revenue is $5,000 a month, your expenses say $3,000, and you're taking home, or your net is going to be $2,000. But there are pros and cons when it comes to Airbnb. The pros here are higher monthly income, tax write-offs, flexibility. Yes, these are all the pros in Airbnb. But here are the cons. Management is heavy. You got to manage everything. Regulatory requirement or risks associated with running Airbnb, and also seasonal income. Sometimes you might not have all the people to occupy your Airbnb. Segment number 3 is the long-term rentals, and this is where most investors build wealth over time, because the longer the tenant stay, the more cash flow. Houston average rent for a 3-bedroom ranges from $2,000 to $2,500, and for a 4-bedroom home is $2,500 to $3,200, depending on the areas that you have your home. And best area for long-term rentals is 1, Cypress, because of what? Strong schools, family rentals, and appreciation, your property appreciation. And second one here is Katy, Texas, again because of high demand, corporate tenant, and strong school district. Third one is the Humble Spring area or suburb. They have a lower purchase price, strong cash flow, and that is why it's good for long-term rentals. Fourth one here is a northwest of Houston. Home here are affordable, high yield, so you're going to see a return on your investment in this area I just listed here. Purchase price for homes in this area could be $300,000 and your rent say $2,300. Mortgage plus expenses could be $1,800 and your cash flow $500 a month. Appreciation plus equity will give you long-term wealth. And here are the pros when it comes to long-term rental. Is you're going to have a stable income, lower stress, easier financing when it comes to long-term rentals. But there are also cons associated with this. You're going to have a lower monthly cash, slower scaling, and all that is going to bring your long-term rental some of these disadvantages. Segment number 4 is the cash flow comparison. I'm going to explain the cash flow between Airbnb and long-term rental. Monthly net on short-term rental could be anywhere from $1,500 to the $3,000, and for long-term rental, monthly net, which is your cash flow, could be anywhere from $300 to $700. But here is the catch: long-term wins when it comes to financing and how you can get money from the lenders to do that. It also brings stability. You want to see this thing be there for the longest time. It brings you the benefit of scaling your portfolio. Here is where short-term rental wins. You're going to have a consistent cash flow over time because of the tax benefit and also flexibility. You can easily decide not to continue or move on to the next phase of a business. Segment number 5 is which makes more money between short-term rental and long-term rental. Here's the truth investors don't want to hear. Airbnb will lead to higher cash. Long-term rental will lead to higher wealth. The best investors among the two, they both bring you money. They bring you cash flow over time. But the strategy all depends on how you apply, which will suit your need the most. Buy in Cypress or KD if you're looking for long-term rent. They convert to Airbnb later. Segment number 6 is biggest investor mistakes. These are things I see most of my investors doing all the time that cost them money. Buy in HOA with short-term rental ban. Overpaying for the property that doesn't bring them money as they expect. Underestimating taxes. The tax in certain area is very high, so you need to plan for that. Buy in the wrong neighborhood that you don't see consistent people coming in there. If you're thinking about investing in Houston, I can help you and project you the right way and find you which property will find you will bring you cash flow. Analyze deals and build your real estate portfolio. I'm a local investor and agent here in the state of Texas and in Houston, so I can help you with all of those steps and recommendations to get started. If you want Airbnb ready homes, if you want cash flow rentals, if you want off-market deals, message me with the word invest and I will send you my Houston investor deal list. Houston is one of the large cities where regular people can still build wealth through real estate, but only if you buy in the right area with the right strategy. Please determine which area, which investment strategy suits your need. Do you prefer Airbnb or do you prefer long-term rental? Please bring your opinion, put it on the comment section. Let's have a conversation and I will provide you with my honest recommendation.